All right. So thank you again for everybody who is on this webinar. Glad to have you on this call with us. This is a part of our weekly Master the Basics of a Stock Market Research webinar. And we do this every week. It's supposed to be a quick, fast, and friendly get together for stock cards user or people who are part of our community on stock cards Facebook group, or that are followers of ours on social media. Anyways, anywhere that you have come across a stock card. So we do these get-togethers to just hang out and ask some of the key questions that we have when it comes to investing in the stock market. So as I said before I start recording, today I thought we'd do something very special. And what I'm going to do with you is live on the webinar, do the research and pick one company for Stock Cards 2019 starter portfolio. And if you're not familiar with Stock Cards 2019 starter portfolio, let me share the screen, Stock Cards Portfolio Store, and tell you about what this portfolio is all about. So if you've ever visited a Stock Cards Portfolio Store, on the top you have multiple options, and one of these options is called Portfolio Store. If you click on Portfolio Store, you see that we have multiple portfolios there, as you see on the screen. And each of these portfolios are managed by different investors or portfolio publishers, as we call them. Some of them are actually my own real-time personal portfolio. For example, Roll with Our CEO is my personal portfolio, and I share with you all of my actual investments. The one that I want to talk to you about is this starter investor portfolio. So we did this last year as well in 2018. As you see here, it says 2018 starter. Let me zoom in if you want to see it. So this was a portfolio we started last year for stock market investors that are joining a stock cards portfolio community and who wanted to get started in 2018. And every month we picked one stock for this portfolio. And by the end of the year, your portfolio had, if you followed us and invested with us, you would have had 10 to 12 stocks in your portfolio. And as you see, this portfolio has already gained 21% since 2018. And as you see, it is overperforming the S&P 500 index by 10%. So had you invested with the Start Cards starter portfolio in 2018, you would have outperformed the S&P 500 by 10%. And so we liked what we did last year, and we got a lot of positive feedback from our users. And that's why in 2019, this year, we also started another starter portfolio. So we call it 2019 edition. And again, the goal of this portfolio is to pick one stock per month and pick stocks that are suitable for someone who is just starting their portfolio. So this portfolio doesn't have some of those riskier things like pharmaceutical or like early IPOs or early companies that are not making a lot of money, and investing in them comes with a lot of speculation. This portfolio is not about that. And I will go through some of the key indicators and financial information that we review to pick stocks for this portfolio live with you in a couple of seconds. But the portfolio starter portfolios is designed for someone who is starting and who's not ready to take a lot of risk. And we hope that some of our community follow this portfolio. and be able to create their own personal portfolio by end of 2019. So the goal is pick one stock every month, and by end of 2019 you have a very well developed portfolio of 12 stocks. And the good news is that even the 2019 starter portfolio has five stocks already in it, because we picked one in Jan, one in February, one in March, one in April, and one in May. And today we're going to pick the June's pick. So 6 stocks by end of today. It has already outperformed the market by almost 11%, as you see on your screen. And the average gain of the picks in the stock in this portfolio is almost 18%. So this is really what I wanted to do today, live with you. And if you are not already following this portfolio, if you're on this call or you're listening to it later on, as you see on the top right corner of the screen, there is a bell icon that you could click on and helps you follow this portfolio. And all that means is that whenever we add a new portfolio to this, a new stock to this portfolio, you will get an email notification that says, hey, the portfolio you're following just got updated. And so that's a really good way to stay just ahead of everybody else and get notification on what's happening about this portfolio. All right, so let's get started for today. There is a couple of things that we always consider when we want to pick a stock for a starter. And it's sometimes it's very easy for early investors to just kind of get into the frenzy of the market and they start thinking about, oh my God, I need to invest in IPOs and I need to invest in even like Amazon, which is a good company, but it costs now $1,900 per share. And that's a lot of money for a new investor to put a portfolio, someone who is just learning and trying to figure out what are the indicators to pay attention to when you're picking a stock. Investing in one share and paying $1,900 for Amazon stock it's not very easy to do. It's not an easy decision. So one of the most important things we consider when we want to invest in or pick a stock for a startup portfolio is to make sure the stock price, so the actual dollar value that you pay for the stock, it's not outrageous. So it's anything that is more than $100 per share. Although this doesn't mean that the stock is being expensive, but it just means that we're picking a stock that even buying one share of it, it doesn't feel scary, and it doesn't feel that you have to put a significant amount of money into it in order to pick a stock and build a startup portfolio. So that's why if you use the advanced filters that exist on the stock card, or even if you're doing it on your own, if you're a starter and you're just building your portfolio, you don't have to go and pick the most expensive stock that everybody is talking about, like Amazon or some of the more expensive stocks, even like things like Adobe or even Facebook and those kind of stocks. They are all at least more than $100 per share. If you want to buy even one share, you have to pay a lot of money. And it's not advisable for an early investor because you would want to take small bite-sized decisions, and then you could gradually increase the amount of money that you're investing in the stock market every month. And again, let me pause here. Even if Amazon is $1,900, it doesn't mean that the stock is more expensive compared to another stock that is $5. It just means that the amount of money that is out of your pocket to start investing or pick one share of that company is higher. So that's what we mean by picking stocks that are affordable. So for an early investor, let's just focus on a stock that the price per share of it is either between $1 to $10, or I would just say 10 to 100 as well. So anything more than 100, it's probably a lot for an early starter investor who is just getting used to what's happening in the stock market. So far so good. You're following what I'm trying to do here. If you have any question, or if you want to jump in and share your point of view, make sure to open the chat box, which is on the right hand side of your screen if you're on desktop, or if it's on the bottom of your screen if on your mobile, and type in your questions or your thoughts and ideas as I talk um, here in that box, and then we can have a conversation around your point of view as well. All right, so far I've talked about starter portfolio. It's a portfolio that we do and at Stock Card, and we pick one stock per month. And the goal of the starter portfolio is to help someone who's just starting make decisions with less risk and pick more affordable stocks. And by the end of the year, create a portfolio of 12 stocks to build the foundation of the portfolio for that starter investor during 2019. And today we're picking June's pick for Stockers starter portfolio in 2019. And then first thing we did is we went to this stock price filter, and we narrowed down the universe of all available stocks out there to companies that their share is between 1 to 100 or 10 $1 to $100 per share. And that's only because we want to provide an opportunity for finding good stocks that are not outrageous in price in terms of per share, so that a starter investor doesn't have to spend a significant amount of money to just get started. So as you see this, using this filter, it narrowed down the universe of all stocks available to stocks that are between $1 to $100 per share. All right, moving on to the next indicator. One thing for sure that I always consider when it comes to investing for a starter investor or picking stocks for a starter portfolio is that I'd want to avoid nano caps or tiny companies that are less than 50 million, or even micro caps, companies that are less than 300 million, and even small caps, the companies that are less than 2 billion in size and market valuation, market cap. I want to exclude them from this starter portfolio. The reason behind that, it doesn't mean that you can't find good investments in those smaller companies. It's again because we're picking a stock for a starter investor. Investing in a smaller companies usually come with an inherent risk of just being small, and most of these smaller companies, they're not as established as the bigger one. Most of them don't have a long history of operation as a publicly traded company, and there's usually less amount of analyst coverage, media coverage, and scrutiny, public eyes and scrutiny on top of these companies. So it's a little bit difficult to follow these companies for a starter investor. So although you could still find good companies in those smaller category, but for a starter portfolio, I would always want to go with either a company that is known as mid cap or a company that is known as large cap. So anything bigger than $2 billion in total company size, also known as market cap or market valuation, it's a good fit for our starter portfolio. So I apply that filter to this universe. And then as you see, again, these filters are here. So we now have stocks or companies, and I scroll down, more and more shows up, are between $1 to $100 per share, and their market capitalization or market size, company size, it's bigger than 2 billion. All right, now you see there's still tons of companies that kind of fit into this result. Something like Zoom Video, which is the early IPO, the recent IPO, Stitch Fix, tons of even IPOs already fit, even Uber fit into this filter that I've done so far. So I still don't feel comfortable picking a stock out of this universe for a starter investor who is just starting and doesn't want to take that much risk and want to go after companies that are more stable and help them build a foundation for their overall investment portfolio. So the other thing I want to do is just click on company strength and narrow down the universe by picking companies that their operations is good or strong. So again, it doesn't mean that you can't find good investments if there's a company that has an operation that is have some concerns around it, or maybe even sometimes some struggling operations can turn to become very good investments. But for a starter investor, we want to minimize the amount of risk. And gladly, there are so many companies out there in the stock market that you don't have to just pick the companies that have some concerns about their operations. So I want to narrow down my universe by companies that their operations is pretty strong. Here in this filter, I have strong operations. And that would allow me to focus on companies that already have a stable management. Probably their revenue is growing, they're profitable, they have enough cash available, or they don't have any cash constraint. Those are some of the indicators that goes into this filter behind companies' strengths. And that's why I want to narrow down my universe based on those stocks that have a strong operation. And so, are you with me? Before I move on to the next filter, and hopefully we pick one company for this portfolio, is there any question, any thoughts or idea you would want to share? So feel free again to type in your question in the chat box, or even unmute yourself and jump in by asking a question about what we are doing here, and share your thoughts and ideas. So far, to wrap up, so what we've done so far, we are picking June's pick for Stockard's starter portfolio. And this is a portfolio that we've created for people who just started to invest in the stock market. And we pick one company per month for this portfolio. And so far, we've narrowed down the universe of all available stocks out there down to companies that their share price is between $1 to 100. And we're focusing on a little bit of a bigger companies and trying to remove all the riskier smaller companies. So we're focusing on companies that their market capitalization is more than $2 billion. And we're also focusing on companies that their operation is pretty strong. Because for a starter investor, we want to pick a company that is relatively stable, is not as risky of some of other companies that fluctuates a lot in the market. And we want to create a foundation for a portfolio that can outperform the market. So far we've picked these filters and we've narrowed down the universe to several stocks that meet those criteria. There are two more things I want to do to this filtering process in order to choose a stock for Stock Cards 2019, June 2019 starter portfolio. So one thing for sure that I always consider is going after for stocks that their fair share price is good or undervalued. And let me pause here for a second. You can still invest in a company that its share price has already gone up and has become overvalued. For example, Amazon is a good example. Almost always, Amazon has been an overvalued company or overvalued stock. So investing in overvalued companies doesn't necessarily equate to bad investments. But again, because we are talking about less risky, more stable portfolio for a starter investor, we will want to avoid investing in companies that are overvalued, because if something goes wrong in the market, overvalued stocks are usually the first one that get hit, because most likely the market has gone a little bit overexcited about those stocks. So if something goes wrong in the market, overvalued stocks usually fluctuate very rapidly or fall down very rapidly. So for a starter investor, it's very important for us to go after companies that have value they're undervalued in terms of their stock price, so that there is already an opportunity to grow the value of that investment rapidly without taking the risk of investing in overvalued stocks. So that's why I chose the fair share price filter and picked only companies that are undervalued, that have undervalued share price. And I applied that to the filter, and see this universe of stocks are now kind of getting smaller, because we're now getting closer to a stock that might be a good fit for our 2019 starter portfolio June pick. All right, one more thing before we focus on one stock. I want to narrow down this universe based on investment return. So here is the thing. Again, because we're focusing on riskier and less volatile stocks for a starter portfolio, we want to focus on companies that in the past couple of months and years have already been good investments for their investors. Why we do that? Because historical data is one of the best indicators of the strength of operation of a company. Although there's this wisdom in the market that history doesn't necessarily show the future, which is I totally agree with. But when you're dealing with stable companies like the ones that are picking with for a startup portfolio, if you pick a company that has already been outperforming the market and providing a great return for investors, because we are only also focusing on companies that their operation is strong, it means that this company that has a strong operation and has been growing, there's limited reason to believe that this stock's gonna fall over the next couple of months. It's almost like if you are a good student and you keep scoring high on your exams and you also continue to study, there's no reason really for your performance to come down, right? So this is the same logic if you think about it. That's why for a starter investor, I would recommend going after companies that already had a good market overperformance in the past couple of years. So apply that filter, and then voila, you see the number of picks that are available now for a for starter investor is now just a couple of stocks. And then the last thing I want to do to narrow this even further is just focus on companies that operate in a market that is rapidly growing. All right, think about it. We pick the stocks, or we're focusing on the stocks that are affordable in terms of dollars per share. We narrow down the universe on the stocks that have big size, bigger than 2 billion. We focused on companies that have a strong operations, so their sales is growing, they're profitable, they don't have cash constraint. And we also focused on companies with fair share price or undervalued share price. And we picked companies or filter that help us narrow down this universe for companies that have been overperforming in the market in the past couple of years. And the only thing that is left is just focusing on companies that they're operating in a market that is rapidly growing. Because if you're focusing on that company that has all the criteria that we've already talked about and is also operating in a growing market, you drastically reduce the possibility of this stock underperforming the market because it meets so many important criteria that leads into in a very stable, very well managed stock with a high probability of growing in the future. So apply this filter as well. And what's left is just two companies. One is T-Mobile and the other one is Discover Financial Services. These two companies, I would feel very comfortable adding any of these to my starter portfolio for June of 2019, which is this month. But I want to just spend a little bit of time on one of them, maybe T-Mobile, and to spend a little time on understanding what all the filters that we have applied, how does it actually look like in the company's stock card. So I'm going to click on T-Mobile's stock card and see what's going on in there. Before I continue, if there is any question or if you have any thoughts or ideas you would want to share, don't forget to type in your question in the chat box. The chat box is either on the right-hand side of your screen if on your desktop, or if you're on a mobile screen, it's on the bottom of your screen. Look at the chat, look up the chat icon and type in your question in that box, and I'll get a chance to answer that very soon. All right. We're now focusing on T-Mobile, and as you see, this company has a growing market potential, has a strong operations, has been overperforming the market in the past few years. That's why you see it's green. And then the share price is also undervalued. You see that it's green. And the stock price in this chart, it's $73.78 as of the time that I'm recording this webinar. And maybe more importantly is that the sentiment in the market about this stock is pretty calm. It's in the yellow range, and if you read it, the little bit of the explanations that we have here, investors are neither too excited nor fearful about the company, and the stock is neither overbought or oversold. This is a calm day, perfect for making a logical and informed decision about this stock. So at this point, I'm feeling very well and very excited about this company. And you may want to log in and spend a little of time and get to know this company a little bit better. But for one example, I click on the company's strength and show you why this company just showed up in that filtering that we did. The company has a relatively okay leadership team by showing this yellow stable color. Sales have been growing. So the company's last fiscal year revenue growth rate has been almost 6.6% growth. The company is expected to grow again more than 5% in this fiscal year. The company is already profitable. So you see the earnings per share of $3 or $3.39, and the earnings per share has been pretty stable. In terms of cash availability, the company doesn't have significant amount of debt. For example, debt to equity ratio is just 0.52, slightly higher than 0.5. We usually want to see the debt to equity ratio of less than 0.5, but this is not really that far. One concern about the company is that its free cash flow right now is negative, meaning that the company has a still significant amount of money that it's investing in different things, and that's why the free cash flow is negative. And by the way, for something like T-Mobile, that's pretty understandable, because they're going through the acquisition of a Sprint, and that acquisition probably consume a little bit or more of their cash. So that's why, knowing that context, I'm not very worried about this cash issue at this point, but it's something that we have to consider. And look at all the KPIs or indicators. This is a very well managed company with a strong operations, and market is calm about this company, and it meets all of our criteria. So I would want to buy this stock for our stock cards portfolio, starter portfolio. One thing interesting is that the stock cards team decision, this is my team's decision about this company, is already buy. I can click on this CY button and see what's happening. And one thing very interesting is that we actually picked T-Mobile for our 2018 edition of a starter investor portfolio. So we've already had a confidence in this company last year, and we're picking it up again this year because the company continue to perform well and meet all the criteria that is required for investing in a stable company for a starter investor. And then if you are one of our paying users, you'll be able to see some of these editorials or read through these editorials and the reasoning that we have behind this stock. But you really don't need to, because I just shared all the reasoning behind this company and investing in this company. So as I explained, this is a pick for our stock cards 2019 starter investor portfolio. And live here, I'm going to add T-Mobile to this portfolio so that next time when you are logging into your stock cards account, or you're looking at your, I'm having difficulty finding the ticker here, T-Mobile, here we go. Okay. Log into StockCard or watch or follow some of the portfolios on the StockCard's portfolio store, you're going to see and that this portfolio is already included. And you know why? Because you were on this live webinar for with me. And here we go. Added. There you have it. That's our pick for StockCard's starter portfolio in June of 2019, and you saw all the filters we apply and how we go about picking a stock for that. I hope this was a good and helpful webinar for you, and make sure to reserve your seat for our future upcoming webinars. We run these things every week at 11 a.m. Pacific time, and you can reserve your seat, submit your questions, and the link for reserving your seat is calendly.com/stockcard/webinar. And yeah, that's about it. Thank you so much for joining. Any questions or any comments or any feedback, feel free to reach out to me or my team on StockCard's Facebook group, or just submit your question through the process when you're reserving your seat for next upcoming webinar. Thank you, everybody. Glad to have you here on this webinar, and happy Friday.